So, CoinGPT is saying that we've got a BB squeeze on Bitcoin and a few other main cap currencies like Ethereum, BNB, XRP, and Tron. So, a Bollinger Band squeeze is detected when the Bollinger Band width is at its narrowest in the last 20 periods, indicating extreme compression. Historically, tight squeezes provide explosive moves in either direction. Watch for the band and the initial candle direction to determine the breakout to the side. So yeah, let's take a look at Bitcoin. It does indeed look like we are getting heavily squeezed and rejected at the Bollinger Bands here. The interesting thing is the volume is dropping off very heavily. So coming over to Bitcoin here, let's take a look at what we've been doing for the past little while. At the end of January, we started breaking down into this new level, and then essentially all of February, March, and now we're into April, we've just been trading horizontally between these two bounds here, between 60K or more recently 62K and 65K support levels, and trading up to 72K, 73K, and 75K resistances. We spent the majority of the time in the upper half of the channel, and now at the moment we really are getting squeezed, and we're looking at if we're going to have a breakdown here or if we're going to have another rise as well. Could we also say that there's a triangle here? Not really. Kind of to a little bit looks like a bear flag to me, to be honest. Now, either we're going to get a bounce on this channel here and start going up again and retesting those previous resistances at 72, 74, and 76, or we're going to end up going a lot lower. And now where could we go? It could be the height of this, in which case we could be looking at a decrease down to 53, 54K here, which I don't think is unreasonable for a bottom of the bear market. I think the bottom of the bear market is going to be somewhere from 49 to 39, I would say. What is CoinGPT saying for Bitcoin now? To sell in the medium-term time frame /daily equivalent. We've got low volatility with bearish momentum building, I would agree. We're testing the upper Bollinger Band resistance now, but it lacks conviction for the upside breakout. So it's saying that essentially what we've got is a higher likelihood of breaking down to the low side rather than to the high side. It's charted out some basic support and resistance levels for us here, and it's also given us a stop loss 2 to 3% above the entry, and a position size 1 to 2% portfolio per trade, and a take profit 1 to 1 or 1 to 2 risk to reward ratio. How would I trade this? I would trade the height down to there, a short position. If we get a confirmation, we would be looking at a 16% trade, and I think the stop loss can be very tight. If it ends up breaking below here and then travels back in, we know very quickly if it's broken back within this boundary and starts trading up, so we can exit out of the trade. So perhaps a 1 to 3 risk to reward ratio here. 10x leverage at $100, we'd be risking $53 to make potentially 167. In the other side that you think you might be bullish right now, what does the trade position setup look like there? You could long from the bottom here and trade up to the previous resistance. So then in that case, if it was $100 at 10x leverage, then you would be risking $35 for a potential $140. Actually a better risk to reward ratio, 4 to 1 instead. But what do you think? Let me know in the comments. And if you want to sign up to CoinGPT and place your trades through CoinGPT automatically, the link is in the description for you.